So welcome back to Everything Marketplaces, where we talk with founders and leaders from some of today's top marketplaces. So this is episode 134, which is a really great group chat that we just had with Sydney Sykes, who's a partner at Lightspeed Venture Partners. So Lightspeed is a leading venture fund that's backed notable marketplaces like Faire, BetterUp, Vinted, Grubhub, and many more. So this is a really great chat with Sydney, where we got to learn more about how she first entered the world of venture and investing in startups, did a deep dive into Lightspeed as a fund, what they look for in marketplaces that they invest in, discuss the current state of fundraising, and also had a really great group Q&A. So really enjoyed this conversation. You're going to find it a great watch to the end. So Sydney, welcome to the group chat, and it's definitely great to have you join us here today. So I'd like to start off by saying, huge thanks for taking the time to do so in advance. So before we really dive into your experience and more about investing at Lightspeed, I thought it might be great if you can start off by sharing a little bit more about your background, though, for those that might not know you.
Great. I focus on a few different things at Lightspeed. I focus on one, future of commerce and shopping. So companies in the e-commerce enablement, consumer marketplaces, broadly that space, as well as SMB enablement. And so a lot of what I end up focusing on is inherently related to marketplaces because, when you think about commerce, it's about connecting people to things or people to other people with services. And so I've been really excited about this business model. Going back into my background, so I started out at NEA doing early consumer investing and was there for a few years as their first analyst, which was a really interesting experience to first learn venture. Ended up while I was there doing my first angel investment and also starting a nonprofit focused on increasing Black representation in venture capital called Black VC. So when I ended up leaving NEA to go to the operating side of things, I still stayed really close to venture. I became a more active angel investor. I continued to run this nonprofit, which got bigger and bigger. But then I started working at some SMBs and then mostly at an e-commerce startup called Dollskill. And I led growth and strategy for most of our native brands at Dollskill. Was there through the pandemic, was there through issues around Black Lives Matter. It was an incredibly interesting time to be working in commerce and retail. It was an interesting time to be working anywhere because there was so much change. But ultimately working there while investing, while also running my nonprofit, I decided I need to go to business school to kind of figure out what I wanted to do with my life. So ended up going to Stanford GSB for business school. And while I was there, I scouted for Lightspeed. I started scouting for them, and it really gave me the time I needed to think about if I wanted to go back into investing and to build up my own track record as well. So invested in a few companies in the marketplace space while I was a scout. And that sort of led me to joining Lightspeed full-time about a year ago. And so I'm so excited to be here with all of you. Please feel free to ask me any questions. I'll answer just about anything, and I'll let you know if I can't, but excited to chat.
Yeah, that's a really great background, so much we're going to jump into here. So I guess kind of going back, so you have some really great experience, I would say, from the operational kind of side, some of those initial kind of angel investments and then kind of moving from a scout to kind of venture. So what were some of those, I would say, like kind of early learnings, investing, I would say, in, kind of commerce and marketplaces maybe that you've taken with you to Lightspeed now?
That's a good question. So there's a couple different learnings. One is, a lot of times as an investor, I really focus on what is the moat, what is the differentiation here, how are you able to build something that no one else is able to build? But I actually think in marketplaces, a lot of times the first company to market isn't always the best. And so it's really important to look at companies and think about what is the new thought? What is the new iteration and the timing that makes this version better than previous versions? So I think a great example of this is the resale space. I think companies like Poshmark and The RealReal really set a great foundation for what the resale space could be. And it showed just how much consumers were interested in this sector and this type of shopping. But at the same time, a lot of those business models were really challenged. If you look at the real, highly operational, if you look at Poshmark, not really a great consumer experience. If you look at various other companies in this space, there was just a lot of challenges that actually made the margins not that great and the customer experience not that great. And so I invested in a company called Archive, which I invested as a scout, and then Lightspeed invested again at the seed and Series A, that creates resale platforms for brands. So if you went on like Oscar de la Renta's website, they would have their own peer-to-peer service that's much more brand, loyal to the brand and helps the brands as well in terms of regaining some of that revenue. And also is a better, more trusted experience for a lot of consumers. And so that's, I think, an example of looking at a marketplace that exists and not saying just because there is an incumbent means that I shouldn't enter this space. Now, on the other hand, you look at companies like Amazon, and no one has disrupted Amazon. It's pretty tough. Even, Walmart has kind of tried to disrupt Amazon, and that's tough. So I think it's really hard as a founder to understand where there's room to optimize a marketplace, either focus on a more niche approach or take a better approach that leads to better margins, and where there's an incumbent that's actually really capturing the market in a way that customers like. So that's one of the learnings.
Yeah, no, that's a really good one, and one that comes up quite a bit here in the community with founders, right? Like how niche or kind of vertical do you go, right? So I did actually want to just, and we're going to just like dive right into things here with some of the topics I want to chat about. But you mentioned as far as like being a scout, right? So that's something that a lot of founders here that are fundraising have mentioned. And so could you maybe give us like an overview of like what a scout is and kind of how that fits within the the world of venture?
Yeah, a scout is something of a mix between an independent contractor and an angel investor. Basically, you partner with a firm. The traditional way it works is you partner with a firm. They get set aside some money for you to invest on behalf of the firm, maybe with some approval process. And then you split the return on the investment, whether that's 70-30, 50-50, 90-10. There's a bunch of different splits. And the idea is the incentives are aligned for you to make great investments. If you're a founder or even a student or something else, it gives you the money to invest in those companies. And you're bringing in great deal flow for the VC firm that you're partnered with. There's also more casual scouting relationships where maybe you just have a great relationship with a partner at a VC firm and you send them deal flow. And they may, give you some sort of bonus or something like that. Or it may just be that helps you build up a relationship in case you wanted to become an investor down the line. Or there's like the idea of a venture partner, which is sometimes like, an advisor to a VC firm. You may bring in some deals, but also you have a specific set of expertise where you can jump in and advise their portfolio companies or help the actual investors think about a space that they might not be able to know as well because they can't go as deep. But I think scouting is a really great opportunity. It's a great way to hone your perspective as a founder by taking your perspective broad, because founders are generally very deep. They're very focused on what they're building in the area that they're building in. And I think it is helpful to take a second to lift your head up, look around, see what kind of investments are happening in the world.
Yeah, certainly. So as far as like when it comes to like how scouts, evaluate like an investment and, how that might differ, I would say from like venture and an early stage fund, you have some really good experience with that. So could you maybe share a little bit more about how you evaluate investments from a scout kind of point of view versus venture?
Sure. I've thought about this a lot. When I was first started on venture, I was at NEA. And so I was thinking a lot about what are the kind of deals that NEA likes, what are the kind of deals that will help me, help the firm, what are the kind of deals that the market is looking at, let me make sure I don't miss anything. And when you're an angel investor or a scout, I think the question you really ask yourself is, what are the deals that, I personally want to be associated with? What are the companies I really want to exist in the world? whether that's because I really believe in the founder or because I think this company or space or product needs to exist. It's a bit more of a personal motivation. And I also think the risk tolerance is a bit higher, in part because they're also smaller checks, but also because it's on you if it doesn't work out. Versus when you're investing for a firm like Lightspeed, I'm there to provide financial returns for our limited partners. And I'm also there to help my firm become the best venture firm, hopefully, in the world. And so when I think about the companies I'm investing in, it's not just my perspective I'm taking into account. It's a broader perspective about what I think is the highest impact company I could possibly put my money and my time behind.
Yeah, that's going to be really helpful for founders here. So I guess like jumping right into Lightspeed, right? I'd say most know of Lightspeed here in the community, but for those that don't, could you give us like a brief overview of Lightspeed as a venture fund?
Yes. So Lightspeed is a large generalist venture capital firm. Our last fundraise was a $7 billion fundraise. So we have a lot of money, and it means we invest in a lot of different kinds of things. The way Lightspeed actually works is we have a few early stage sector teams. So for example, I sit on the consumer sector team. We also have enterprise, healthcare, fintech, crypto as well. And then we also have a growth team that sits more horizontally. And so we end up, the nice thing about this structure is we end up being very collaborative. So say I bring in a company that's a consumer fintech company. It might be that I pick one of the partners on the fintech team and say, let's work on this together. Okay, actually, it's a growth team, so let's bring in a partner from the growth deal as well, or from the growth team as well. And then when it comes to the investment committee, let's have the deal, meet investors from multiple different teams and have that support around a company. And it also means when our companies grow or pivot or move internationally, we're able to support them through that as well. We also have a great global practice. We believe venture is a global business. So we have offices in Southeast Asia, India, Tel Aviv, Europe as well, and have made many investments in South America. And then I'd say the last thing about Lightspeed that I think is really unique and different is we are a firm that really focuses on going deep. And so I mentioned up front, my focus area is commerce, shopping, SMB. There might be someone else on the team who focuses solely on social and interactive entertainment, or someone else who focuses just on health, or someone who focuses on consumer fintech. We really try to learn our areas as best as possible. We will never be as expert as all of you are in your companies in your specific areas. But if we focus on specific subsectors, we're able to go really deep and be much more helpful to our portfolio companies and also be more collaborative with each other.
Yeah. And then as far as, you're I would say multi-sector, but what about stage? What stage do you typically invest at, and what's that, kind of check size like?
We actually don't really have a typical stage. We'll invest as early as the seed, even if it's a pre-product bet where we're betting on some change in technology or some unique ability that a founder has. And then we'll invest as late as pre-IPO, and we'll invest anywhere along the way. And the interesting fact about Lightspeed is there's some companies where we were the first check in, and then we've invested over $100 million in the company over time. So we're investing again and again at the seed, at the Series A, at the Series B. We're also bringing in strategic angels and other investors. But we'll invest at all stages, and we're there to be supportive for the life cycle of the company.
Yeah. So one of the things that comes up in the community quite a bit here is, with I would say like the kind of multi-stage and I would say like a special kind of sector funds, founders thinking about like at what point in time is a good time to reach out and establish, relationships or build relationships with the funds and the partners. How should they kind of think about navigating that? So is there like a really good example or maybe kind of tips that you might have for founders on that?
Yeah, I think It's never too early. There's people we've followed for years because they worked in one of our portfolio companies, and we always thought they might start a company, and so we stayed close to them and kind of supported them throughout their career. There's also people we've met at the pre-IPO stage and invested in them. But I'd say the earlier the better. The caveat I'd add is we love to be helpful and we love to know where we can be supportive. So if you come to us with a challenge or an idea or a question that we can really go back and forth on, that's going to help us build the relationship even further. So really excited to get to know companies at any stage, but particularly ones where you're either thinking about a challenging problem or thinking about building out the team in a unique way. Like, we want to be there for those kinds of conversations and help build that relationship over time.
Yeah, and then as far as if we kind of like zoom in, I would say like on the pre-seed and kind of seed stage, if you're having conversations with marketplace founders at that stage, and we can even kind of go into, I would say, like consumer and even kind of focus on commerce, are there kind of specific metrics or benchmarks that you're kind of looking for at that stage? Or
there really aren't specific metrics or benchmarks. The way I think about early stage investing is there's bets on the person, which is, why are you the best person to build this business? Is there something about your background, your understanding of the space, your network and ability to build a team, or your technological skill set that makes you the best person to invest in? So that's one reason we might invest. Another reason we might invest is around the product. Is this just a blow you out of the water product, like more impressive than what we've ever seen, really just kind of market creating type of company? That's another reason we might invest at the early stages. And then the third reason we might invest would be traction. So this is what you're talking about with metrics. And for that, growth is something important we look at, but we also look at things like engagement. If it's a consumer company, how much time, what does the retention look like? Is this a sustainable product where if you put more money into marketing, it will grow? Or, for an enterprise company, for example, what about net dollar retention? Is this the kind of company where maybe it takes a little while to sell in, but once you sell in, you land and expand and you really grow with that customer to service all of their needs? So there's no playbook for like, this is what a seed bet looks like. This is what a pre-seed company looks like. I think as founders, you all need to think about what is the investment thesis here? What is the rationale for investing in me versus waiting for the next company or betting on the competitor or not investing in this space at all? Because it's not just about the space. It's not just about the traction. It's about a few different things.
Yeah, those are really great points. I know it's going to lead to questions here when we get into the Q&A. But I guess, you mentioned as far as like, the founder and kind of the bet on the founder. So could you maybe share some like the kind of characteristics or traits of, some of the best founders that you kind of see that you might look for?
One thing I really look for in founders is just thoughtfulness. I'd say a founder doesn't need to have an answer to every single question I ask. They don't need to have a, yes, this is the only option, this is the truth in this world. But the founder needs to have thought about every aspect of the business. It's very rare that I ask the founder a question they've never thought about before. And so I want to see that thoughtfulness of response that shows that they're considering the pros and cons of the different options. I think one of the pitfalls is sometimes I'll ask a founder about something in the business that's been particularly tricky. I mean, a classic example for marketplaces is chicken and the egg problem. And the founder will respond, well, we'll do this and that will solve, the chicken and the egg problem. Like, we'll be good. And it's like, actually, there's no way that the solution is that simple. There's no way that there's not more to that answer. And so it's okay to say, actually, I think the question that you're bringing up, I think the concern you're bringing up is very valid. And actually, that's part of what makes my business great is if I'm able to solve that, that's a natural moat where I'm able to build the business while others are struggling with this challenge still. And here's how I think is the best way to solve that challenge. So I think I got a little bit lost and went on a rant, but that's one answer to the question.
If only it was that easy with marketplaces, right?
If only, yeah.
So I guess, when it comes to, I would say like consumer and kind of commerce, what initially kind of attracted you to, I would say, that kind of space or, sector more specifically?
I've actually always been interested in commerce, retail, especially in fashion. I sew as a hobby, so I have a lot of love for clothes and that side of commerce. But then also I studied psychology in undergrad, and I was studying a lot of social psychology and thinking about why do people make the choices they make? Why do consumers buy the things that they buy? Why do brands make those decisions? And so I started having these thoughts from, a relatively early age. And then when I went to work at Dolls Kill, I just saw how, frankly, uniquely inefficient the e-commerce world is. It's very, the excess inventory challenge in the US is a like $100 billion problem. Or things like reverse logistics and logistics, returns, things like how samples go back and forth between here and China. It's an incredibly manual problem when you compare that to how typical enterprise SaaS works. And so that was an area where I felt like there's a lot of impact that venture style businesses and consumer technology and enterprise technology could make a difference. And then that's a relatively large business. That's a medium-sized business. Compare that to what SMBs are going through and how they're dealing with accounting and HR and all these functions that are frankly outside of most people's wheelhouses, but you have to learn them when you're running an SMB. So thinking about the opportunity to provide learnings and to provide the superpowers that these large businesses have to SMBs, those are just two areas I found really exciting and think there's a lot of opportunity for growth.
Yeah, no, that's really cool. So definitely share in the interest in fashion and resale. So
cool.
And we have some pretty cool marketplaces in the community that are building in that space. But on that note, are you seeing any specific kind of trends or maybe even kind of opportunities for marketplaces to be built?
That's a good question. I think there's a few different areas. One, I think there's a lot of opportunity on the SMB side of things. I think to some extent there's been some great innovation in consumer marketplaces. When you think about Uber, Airbnb, Amazon, Etsy. I made fun of Poshmark earlier, but that's also a great example. But on the SMB side of things, companies like Faire are still relatively new. And there actually still, I think, is a lot of opportunity on, let's say, hiring for SMBs or figuring out logistics in like a marketplace structure. There's just a lot of challenges that have inefficiencies and that need solving. And whenever there's inefficiencies like that, I think the marketplace model can be a great model. So that's one area that I think is interesting. I can't believe I've gone almost 30 minutes without mentioning AI, but there's a lot of opportunity with new technology like AI to bring that in with a different business model. So one model I'm starting to see, or one area I'm starting to see, is sort of marketplaces enabling or enabled with generative AI. So for example, let's imagine a freelancer marketplace, but you're able to empower those freelancers to work a lot quicker because they have generative AI tools. Or a, workout marketplace connecting consumers and trainers, where you're able to enable the trainer to engage with more clients using generative AI. So I think these technological waves open a new opportunity to look at old business models or business models that have worked before, but try them with a new spin.
Yeah, certainly. There's you mentioned a few good examples there with one being Faire. So we actually had Dan from the Faire team join us before as a group chat guest.
Great.
Right. Yeah, you guys have backed some pretty amazing marketplaces. So that's really cool. So we're going to get into questions here in a little bit. Otherwise, you and I could kind of just go on chatting. But one thing I did want to cover really quick right before we do. So and this could probably be a whole conversation in itself, but is the kind of I would say the current state of fundraising right now. So for like pre-seed and seed kind of founders. And could you just kind of maybe give us like I would say like a few kind of observations on what you're seeing in the market, and then maybe even some tips for earlier stage marketplace founders that are fundraising at those stages right now?
Yeah, I think any point in time where you have change, there's opportunity and there's also huge challenges. So if you look at everything that's changing around us, this is one of the few, if not the only time we've had high inflation as well as low unemployment. We've also had customer acquisition costs at an all-time high, crazy things going on with the mortgage market. You have generative AI. I could go on and on about all of the changes that are happening in the world that make this an interesting time to be investing, but also a precarious time to be investing. And so there has been some weirdness, I'd say, in the market. There are companies that have traction that aren't able to fundraise, and then there's companies that are pre-product that are raising hundreds of millions of dollars. And I think for a lot of founders, looking at this market is really confusing and kind of unsettling. I think at the end of the day, the things that have always been true in venture is you're looking for a partner for a really long journey. And so how do you find someone who understands and believes in your space? It's not just about saying, hey, look at the numbers. This is a good business. It's about saying, hey, you understand this space. You understand that the underlying unit economics, the underlying thesis, the underlying team of this business is one that's going to win in the future. And I want you as an investor along for the ride. So I think the number one piece of advice I'd give is look for an investor, not just a firm, that really matches your company. The other thing I'll say is we've learned over the past couple of years that the fundraising amount, the amount of money you raise, determines a lot more than just how high profile your company is. We were talking the other day at Lightspeed about how the unicorn title has really rewarded people for raising a lot of money and getting high valuations, when the truth is that doesn't necessarily mean you have the best business in the world. The same thing can be true about the team size. Just because you have 100 members on your team doesn't mean you're actually the best business. And so I think it's really important for founders to consider, how much do you actually need to raise to get to the next milestone in your business? Because you're always, the more traction your business has, the more leverage you have to fundraise. And so I would be careful to founders to advise them to think about how much money they want to raise based on how much other founders are raising or what they're seeing in the news, and really focus on what's right for your business. So those are the two things that I think are most relevant pieces of advice right now.
No, those are going to be super helpful here. So I think, the first, as far as, speaks to the importance of kind of finding a, founder and investor fit. So actually, do you have any tips for that maybe? Or maybe examples of, founders that on the other side that you've seen that have done that well?
Yeah. The advice I often give founders is you should kind of look at early investors, angels, advisors, and employees the same way, which is, who is kind of your ideal hire? Who's your ideal teammate? And then bring them in the relationship that makes the most sense. So say you're starting a fitness app, then the best strategic person for you to have on your team might be the CEO of Peloton, or an investor in Peloton, or someone who helped build Lululemon. And if you can bring them in as an early employee, as a CMO, as a co-founder, great. If you can't do that, maybe you can bring them along as an advisor, or maybe you can bring them along as an angel. depending on what they're looking for in their life or what you're looking for in terms of you're filling out your team. So I think that's a really great approach. And then the other thing is just to be putting yourself out there. I think a lot of people I know have met co-founders, advisors, angels at some of these conferences, just from hearing them speak and understanding, okay, actually, you have some theses that are really unique. They kind of push me, but also align with my view of the world. So just meeting those people, having those conversations is really important. And then, of course, it's all about team and culture fit. So are you able to have productive conversations? You're in a journey for maybe the next 10 years. So it's really important to be able to communicate with all of the people around you. Even if they're an advisor or an angel and you think they're just giving you money, it's more than money. It's a relationship for a really long time.
Yeah, those are really good tips, and especially well to push ourselves. Those that are of us that are technical and introverts here as founders.
Yeah, gotta get out there. Gotta go to the conferences. I feel the same way, but turns out they're still valuable.
Yeah, cool. So we're gonna get into to questions here. Hey, Maxine, did you want to jump on, and then maybe we'll get to Jason or Graydon if you guys want to come on after.
Yeah, for sure. First of all, thank you so much, Cindy. Really useful information. I'm the founder of a company called Pick My Brain. We think knowledge commerce is the next e-commerce. My question is how you help what is Lightspeed's community involvement or education for their founders? How do you get your founders talking to founders? What is your relationship with your founders? And do you get together physically, online? What does that support look like when you invest in a company?
Yeah, so on the first question of how do we connect our founders to each other, there's a lot of different resources. I know there's Slack groups for different, not just for the founders, but like different members of the team. I know there's, we have these kind of like thought leader groups. For example, the other week we did one specifically for CMOs and we talked about go to market and we kind of paired a group together that was going through similar challenges, and I moderated one of the conversations really to help draw examples out of our founders. We host dinners relatively routinely with founders as well as with key thought leaders. So I focus on commerce. I'll have dinners with brands and bring in some of our portfolio founders to kind of be in those conversations. So that's just one of the ways. I could go on, but it's a continuous effort. We have a team really focused on community and knowledge sharing and all these other resources that go along with that. In terms of how I interact with our founders, it depends on the founder, depends on the stage of the business, but I'd say the default is that I'll probably have an hour or more meetings with our founders like once a month, maybe it's once every 2 weeks, kind of depends what they're working through. If there's a specific challenge that I can help with, we might meet once a week, we might meet more frequently. Or if they've just finished a sprint and they really want to be heads down with their team, we might not meet for a month or 2 months or even more. But I think the most important thing is I have a casual relationship with all of my founders. Like they have my phone number, they text me, they call me. It's not necessarily as much about the formal cadence as it is the relationship of feeling open and transparent. Did that answer your questions?
Yeah, very much. Yeah.
Great.
Yeah. Thanks.
Great question. Thanks, Maxine. Hey, Jason, do you want to come on?
My question was related to your comment about using generative AI and the example of improving the experience for freelancers in a freelancer marketplace. I found it kind of interesting that most discussions around generative AI and marketplaces are around improving the speed at which the supply side can conduct their business or kind of do their job to be done. But I'm curious, what are your thoughts on using or utilizing generative AI to actually improve and hyper-personalize the search experience in some marketplaces that are often difficult to find what you were looking for? It's easy to find a TV, but many people don't, they're looking for a TV of a certain size. But yeah, I'll end it there and I'll wait for any questions from you.
Yeah, I think that's one of the most interesting examples. If you think about marketplaces, Uber is an example of a marketplace. And then you have, Etsy, so you have the one search result marketplace, and then you have the 1,000 or 10,000 search result marketplace. And I think the way that consumers are led to shop is probably lends more towards the fewer options side of search results than the 10,000 search results. Like, you're only able to ingest so much information. So one of the benefits of generative AI is the idea of having conversational search, being able to interact with the supply of the market as a consumer. So I think that's a really interesting angle. I think there's going to be a lot of different applications with generative AI, from like productivity tools for employees all the way up through consumer, features that help with the shopping experience. So I think the more creative you get with it, the better. I'm totally pro that, Jason.
This is a great question. Hey, Jason, we actually had a group chat recently too with the founder of Zumper, Anthemos, and he actually shared a little bit more about their Chat GPT plugin and how they kind of using that for personalized search. So, for instance, you could search, looking for an apartment in San Diego, and within X amount of miles from a Whole Foods, and a sunset, and it would actually kind of display some of the listings and results from that. So,
can I add on one comment to what you were just saying about that? It's funny about, using conversational search and experiences that you kind of know what you're looking for. Like, if you're looking for an apartment, you kind of know the location, bedroom size. But what I think is going to be interesting is applying conversational search, generative AI, to industries that have a search problem that people don't know what to search for, but they kind of know how to describe the search. It's interesting, that's what we're doing in the financial space, which is fun and exciting. But yeah, I'm excited to see what comes in.
Yeah, me too.
Cool. Hey, Adrian, do you want to come on? Thanks for waiting, because I know you raised your hand there.
So I'm curious to see what you think about local businesses in relation to SMBs. I mean, they make us such a large portion of SMBs. And I think there's a lot of opportunities there to make an impact, but at the same time, it's a very challenging problem to solve. So I'd like to hear your thoughts from a VC or investor community standpoint of how they're thinking about that space.
Any challenge that is hard to solve is potentially very lucrative. So you're right. Most of commerce, specifically 80% of commerce, I think, is offline. Local businesses make up a huge portion of the economy writ large. And so there's a huge market there. The challenge with local businesses has largely been the go-to-market, which is a similar challenge with SMBs overall. But the question is, how do you figure out how to create some of that organic growth or that virality where people want to talk about your product, they want to share it with each other, and in a way that really locks you in? So, I think they're great businesses. I think there's just that big problem that you mentioned. And once someone solves it, it's going to be an even more attractive area. I think the other thing to deal with that I'm actually less concerned about is a lot of people are worried about the sort of, let's say, death rate of small businesses, like in-person businesses like restaurants are kind of more likely to fail. There's more challenges to deal with and more expenses to deal with an offline business. But again, the market is just so large that if you're able to create some of that organic growth and virality, and you have the stickiness with the businesses that exist in the world, it can be a really attractive business model. I think Faire is a great example, not necessarily locally based, but it's a great example of being able to service an in-person consumer company or small business, and grow it into a really large business.
Well, thank you. If you'd love, if you're open to it, I'd love to, have a follow-up chat with you on that.
Feel free to shoot me an email.
Okay, sounds great. Thank you.
So we're gonna try to squeeze in one last question here. Hey, Levi, do you want to come on?
Absolutely, Sydney. It's a pleasure to chat here. Levi here. within everything marketplaces, I help lead the early stage fundraising meeting for founders. And one of the biggest things that I'd love to get your thoughts on here, and one of the biggest questions that we get in the group is like, how do we go from commit to close, with a fund at the early stages? And, from your vantage points, what would you say are the typical steps, involved in being able to, to get to that close?
Mm-hmm. You're talking about from like initial meeting all the way through. What does that look like?
Yeah. Well, I would say, which is like, hey, you know what? We've had a couple of conversations. The fund is committed, but there's still docs haven't been signed or things haven't been wired. And so, like, what's the advice that you would give for an early stage founder, like that's in like, all right, we've soft circled some dollars or we've gotten some commitments to actually close those dollars and really, like, especially I think in this macro environment, like, get to where, dollars are wired into the account. So, appreciate you.
So let me know if there's more nuance here, but I think the main reason that, something might be soft circled to my understanding is that those investors are looking for a lead investor for the round. And so they say, I will invest in this company, but I want a lead investor in to quote unquote price the round, basically decide what the valuation is, determine the structure of the round. And I don't know if there's a lot you can do in that situation to convince those investors to invest without the lead. The other reason something might be moving kind of slowly is maybe they're newer angel investors or they don't really see a sense of urgency. And so then you can just kind of set a date of like, okay, I'm not actually going to bring in a lead for this round. Everyone here has committed to be an angel investor without a lead. So, we're going to start drafting the docs with the lawyers. You can review the docs and we're going to close on this date. And usually having that date that's set for all investors across the board is not a false deadline. Usually that should work to get everything moving in the direction you need.
Awesome. Perfect. Yeah, no, I think that's good. So the advice that you'd give to folks are like, if you're doing a party round or you've got, commitments, whether it's micro funds or angels, it's really just, set a date, once you've collected those enough commitments and then really, try to stick with it and show the information that's needed.
Yeah. As long as everyone's committed to the round and the structure that it's in.
Awesome. Appreciate you.
Yeah.
That's a great last question to wrap things up here. So Sydney, thanks for taking the time to join us. This is a really fun chat. Now, I know we bounced around a little bit, but this is definitely great to have you join us here. So I had one last question for you actually, and that's if you could go back to maybe right before you entered the world of marketplaces and investing in them, what would you tell yourself about them more specifically?
That's a really good question. I think the thing I would tell myself is that while traction is important, while growth is important, the most important thing is the underlying unit economics most of the time. So a marketplace business is not going to have everything. They're not going to have perfect growth. They're not going to have perfect unit economics, but you need to see the way that the business is going to fix the challenges that make it sustainable. So if they have low growth, you need to see that they're able to develop a viable go-to-market motion. If they have, let's say lower margin, you need to be able to see in the data a way for them to improve that margin by focusing on the right customer or, shifting some motion of the business model. And so, I would hesitate to tell myself to look for the perfect business, but I also wouldn't invest in any business that doesn't have some of that proof or some of that that strategy to get to the sustainable business model that you need to succeed at a really large scale.
Going to be a great parting tips here for founders. So we once again really appreciate it. And last but not least, time for a quick plug. Where can we keep up with you at? And I guess reach out to?
Twitter is a great place to reach out to me. And then also LinkedIn. I just always tell people if you shoot me a LinkedIn message, if you shoot me a message on Twitter, always let me know how I can be most helpful.